it's great to be here again, and Keith, thank you again for the invitation and the opportunity to present to your subscribers. I think we're a little bit different than most of the companies up here. Having listened to my peers who are all in the drilling business, we are different. We're an energy company. Our business is retailing electricity, natural gas, and solar products. We're really quite a unique opportunity. And the business has even evolved quite a bit since the Toronto Subscriber Summit last March. So as we think about our business today, we're really a unique mix of growth and stability. So as a shareholder in our company, we feel like we've articulated pretty clear growth strategies and have told the market we're going to grow upwards of 16 to 20% organic growth over the next 3 years in our core gas and electric business. We've recently made some significant investments in our solar business, which I'll talk about, as we see that as a tremendous way to enhance the fundamental value of our business. From a stability side, I think what is really unique about the opportunity is we have a payout ratio on an LTM basis, last 12-month basis, of sub 60%. And we've been doing that against the backdrop of increasing our distribution quarterly. So for the first 3 quarters of the year, we've increased our distribution 2% each quarter, all on the back of what management and the board believe is a fundamentally strong and growing business. So as Keith said, we have a very strong balance sheet, over $40 million of cash and availability. We have no long-term debt. And we have an embedded margin in our business, which is management's estimate of the runoff value of the book. If we were to shut down shop today and just collect the cash flows from our nearly 1 million customers, of about $300 million US. So there's quite a significant opportunity, and that's the reason total shareholder return is north of 80% since January 1st, 2015. So let me tell you a little bit about our business, who we are and what we do. We are a diversified energy company. We sell essential products, natural gas, electricity, and solar. We have scale and diversity. We're approaching 1 million customers. From a company I started, customer number 1 was $1 million in 2009. We're approaching our 1 millionth customer, and we're on pace to eclipse that mark by the end of this year. What does that scale mean? Scale is a competitive advantage in our industry because our business is about operating leverage. Every incremental customer you serve, it costs you less. So as I go from 1 million customers to 2 million customers, my cost base gets lower and lower and lower, which makes us more profitable per customer we serve. Also, that scale gives us diversity, which de-risks our business materially. So our competitive advantage is how we go to market. We're unique in the energy industry, in the retail energy industry. This industry was built over the last 2 decades with people knocking on doors and calling customers on the phone. We've built our business through developing unique and proprietary channels that have given us an advantage. That allows us to acquire customers for less than our peers and keep them for longer, which allows them to have a higher customer lifetime value, which I'll talk about in a second. And finally, capital. We've got capital to grow. One of the biggest challenges we face is we don't need to keep raising money in the capital markets. We have a very short payback period on our organic growth. We have an extremely low cost to acquire, market-leading cost to acquire, and we've done 6 accretive acquisitions since going public in 2012, all funded from operating cash flows of the business. Again, there's no long-term debt on our balance sheet. So what's neat about our business is this is a huge and growing market. So we're primarily based in the US, is where we operate today. Over 100 million meters accessible, less than 30% penetration. So 7 out of 10 people are still with the utility. We recently opened, actually this past weekend, in Australia, where there's over 6 million homes available for us to market to. But Australia is really a test case for us. I believe The international markets represent significant upside for this business. Japan, for example, 85 million meters just deregulated in April of this year. Deregulation is viewed as a solution to greenhouse gases, climate change, and in the case of Japan, obviously a solution for the Fukushima disaster that happened a few years back. So we see the global opportunity for our business as massive. Solar, and we'll talk about this a bit more. 73 million owner-occupied homes in the US, less than 1% penetration. We've sold, probably, I believe, better than any other retailer in the space, we've sold 60 megawatts of residential solar since late 2013. We have a platform to sell, and recently through multiple acquisitions, we've enhanced how we capture value out of that business, which I'll talk about. So as I said earlier, what makes us different? What's allowed us to go from a $1 million investment to nearly 1 million customers today with no debt, a large payout to our shareholders? It's our go-to-market strategy. So remember I told you that of that 100 million customers, 30% were with retailers and 70% were with the utility? We've built distribution channels that are not going after the 30%. They're going after the 70%. And think about why that's compelling. Because if you use the door-to-door model, why is a customer switching to your product? Price, right? You've got to offer that customer a very low price to switch to your product. And think about if I can knock on that front door, someone else can knock on that front door. Wow, 10 minutes is fast. But when I knock on that front door, someone else can knock on that front door. So that customer is just as fast to leave me when someone else offers them a lower price. So I'm getting a lower margin through that channel, and also I'm going to lose them quicker because everybody uses that strategy. So our strategy is to build proprietary channels that get to customers when they're not shopping for energy. Let me give you a quick example. We have an exclusive relationship with Comcast. Comcast is the largest US cable operator in the United States, I think in the world, with 27 million residential customers in the US. We own and operate in an exclusive relationship with them, a brand, and we market under the brand Comcast Energy Rewards. Their brand name sold to their customers through their channels, our products, our customers. So a customer, you're going to pay your bill. You're online, you're paying your bill, and all of a sudden a pop-up pops onto the screen and says, you get 3 months free of Starz, HBO, and Showtime. Premium package for free for 3 months. Say, okay, that sounds good. Click on that offer. To get that offer, you have to sign up for Comcast Energy Rewards product. You're getting to customers who are not shopping for energy. As long as that rate is fair to that customer, they're going to choose it because they want the bundled, they want the benefit of the 3 months free of Starz, HBO, and Showtime. So that's how our channels work. That's how we're able to get customers at a cheaper cost than our peers who knock on doors and telemarket. And we're able to get stickier customers because they're not out shopping for energy and trying to get the lowest price. They're buying it because of another benefit they get, whether it be green energy or partnership with Comcast. So this is our business at a glance, minute 19. Consistently, we've grown and we're showing the 3 years past being a public company. We went public late in 2012, consistently growing our revenue, adjusted EBITDA, customer count, solar business since going public. As we approach the 1 million customer mark on a forward-looking basis, that puts us close to about $1 billion of revenue as a business. So we're becoming a very sizable business. Other things to point out, just highlighting second quarter of this year, 59.6% payout ratio. Again, in that quarter, we did increase our distribution 2% again. No long-term debt and embedded margin. Our business generates a lot of cash, which allows us to acquire customers without debt and make investments that we've made in the solar industry. Distribution increases 6% since the beginning of the year, 2% a quarter. We've also been very direct with the market that we are going to continue to evaluate our distribution quarter after quarter because we still believe our payout ratio has room to increase. The other thing I'm going to highlight is solar. I believe there's no better opportunity in the energy markets than the US residential rooftop solar market. We've made 2 acquisitions. Well, one is a proposed acquisition. We purchased the residential solar assets out of the Sun Edison bankruptcy process. We were able to buy their team and their entire platform that allowed us to effectively take a customer from enrollment all the way through to installation in the residential rooftop solar market. We also recently acquired a company called Varango Solar. Varango Solar is the 2nd largest solar company in California with almost with over 20,000 installations done, dating back to 2008. So what does that mean? Be quick, 59 seconds. So this was our solar business before. What we did, remember I told you we sold 60 megawatts of solar. What we did before is we took leads generated from our sales force, like a Comcast or a Veridian channel. Leads would come in and then we would sell them. We would hand them to a third-party partner who would then install, take that customer to contract, put the panels on the roof, finance them, and manage that customer relationship. We were like a broker. We did it for Solar City. Most recently, we've done it for Sungevity. What that model resulted in was, of that 60 megawatts of solar we've installed, only 20 megawatts have made it to rooftops. Because when you hand that contract to a partner, there's breakage, there's other issues, the partner has other partners to install. And so if we were able to capture the entire value stream, so what we've done is we've now, through our 2 acquisitions, we now have lead generation all the way through to installation capacity. We do our own design. We ultimately will offer our own financing products. So key takeaways on solar, I'll give you just 2 quickly. Before, 25 cents a watt we were making, and we've sold 60 megawatts of solar. In the new world, we're expecting net contribution of about $1. So about 4 times as much we're earning. We're expecting the cancellation rates to come down drastically because of our role as an energy retailer, and actually owning that process end to end. And with that, please come see it. We're over there, myself and Kelly Castledine. Appreciate your time. Thank you.